Can you use multiple VA loans to buy multiple properties? Can a veteran have 1, 2, 3 VA loans on 3 different properties? Well, the answer is yes. And today I'm going to show you how this is possible. I'm going to show you the math behind it and go over a real life example. So stay tuned. Let's address the elephant in the room. Many believe that once you use your VA loan once, you can never use it again. Or if you have an active VA loan on a property, the next time you go to purchase, you can't use your VA loan. That is simply not true. Now we must adhere to the VA guidelines. Reminder, VA loans are only for primary properties. These are the properties that you're going to live in as your primary residence. So I get this from time to time. It doesn't work on investment properties. Now you can buy a primary home and it eventually turn it into an investment property, but VA loans are for primary residents only. So let's look at a real life example. I'm going to put on the screen the golden ticket when you are first going down the path of using your VA loan again. Okay, so you're going to work with a lender like myself, and we're going to pull your COE, your certificate of eligibility. All right, this is what a real COE looks like. And in this example, you can see that they have an existing VA loan. They used it back in, May of 2021 in Georgia, and the original loan amount was $414,315. The super important part here is how much entitlement is charged, because we're going to use that to see how much remaining power you have to purchase, and it's going to be based on the conforming loan limit of wherever you're trying to purchase. And I'm going to get into that in a minute. So that's one part of the equation. We know how much existing entitlement you have charged on your existing property. The other part of the equation is we got to figure out where you're purchasing that, because it's going to determine your purchasing power. So if you're buying in Texas, it may be different from California or Virginia in a high cost county. So what you need to do is go online, search for Conforming Loan Limits 2024, because at the time of this video, it's in 2024, and the Federal Housing Financing Agency, the FHFA, they dictate every single year what the conforming county loan limit is. So let's take a look. For most counties in America, the single unit is $766,550. The reason why this is important is I'm about to get into it. We got to do some math to see how much you have remaining at zero down, and if you go over that, how much do you have to put down? Let's look at the math. So let's pretend you're moving to Texas and you're going to be buying in Dallas County. So that is conforming loan limit. The loan limit there is $766,550. So what you're going to do, and I'm going to do it with you. Let's grab our calculators, okay? You're going to divide by 4. That's 766,550, divide by 4. Now, remember when we pulled your COE and we saw how much entitlement was charged? We're going to take that amount and we're going to subtract it from that number that we just got. So that 191,637, you're going to subtract the existing entitlement that's used, 103,579. That gives us 88,058. We're going to multiply that times 4. That amount right there, 352,234. That is how much remaining entitlement you have for zero down for your next purchase. Okay, so in this example, if this was your COE and you're looking at purchasing another house and it's going to be 350,000, well, that's below that. You can do zero down because you have 352,234 remaining at zero down. Well, if you're like, Jay, I'm actually going to be buying somewhere a little bit more expensive in Dallas. I'm looking at a $500,000 house. That is fine. You have to put down 25% of the difference over that 352 number. So the math is anything over your zero down. So in this example, 352,236, anything over that, you have to put down 25% of the difference. Okay, so for really easy math, let's pretend you're buying a home that's $452,236. Well, that's $100,000 over. 25% of that is $25,000. So $25,000 would be your mandatory down payment based on your remaining VA entitlement based on the conforming county loan limits, okay? If all this is confusing and you're like, man, I don't want to deal with this, this is what I do for a living. Reach out to me. I don't care where you're purchasing. I'll look up the conforming loan limits. I'll do the math for you and show you how much you have remaining if you already have a VA loan outstanding, or 2 VA loans, or 3 VA loans, or whatever it is. I've had veterans that have 3 VA loans because each time they PCSed, they bought budget, economical, $150,000, $180,000, $200,000 homes, And then now, based on 2024, the county loan limits raised to 766,550. They have more purchasing power, and especially if they move to somewhere like Fairfax, Virginia, where it's actually over $1 million. It's a high-cost county. And if you're a veteran that's about to purchase and use seller concessions, you're going to want to watch this video right here. I'm going to show you ways to maximize those seller concessions and ways to possibly pay off your personal debt to help you qualify.